Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Monday morning market webcast. Okay, daily chart. So we had a big push down last night. They took it to limit down at 2174. They kept it there for a little while, and then started to bring it up off of the limit. So we spent most of the night just trying to get into a long that was going to run using hard stops above the limit, because you don't want to get caught in a limit down in Globex. You really don't want to get caught in a limit down at all. The lower, the lower open is enticing, but the thing you have to be careful of, especially if you're not being mindful of risk, is you can get ripped to the upside. Kind of like, this one didn't rip you to the upside, but if they would have kept this thing jammed into a limit down into the Fed, then, that's really how you can get really wounded trading limit. So as long as you keep a hard stop above the limit, saying, okay, well, I'll get stopped out here, you're fine. So we ended up in a couple of nice trades. Unfortunately, my runner got stopped out at about 1 in the morning when they went back and retested the limit down. They bounced from 2174, and then we had the Fed news at 8. So I'm not in this. And, which, I would have liked to have started my week this way, but, I'm not clairvoyant. And as soon as you accept that fact as a trader, your life becomes dramatically easier. It was a great night. We ended up with some really nice longs. We had a big week last week. And, in a tape this volatile, there are times where you are going to miss moves. And that's okay. The two things you can't do is you can't really chase, because once you do, the trading gods are going to say, well, that's about far enough for this move, and you're going to end up, in something that is going to get very red very fast. The other thing you can't do is run around with FOMO all day. Well, I didn't get in that move last night. I didn't get in the Fed move this morning. So I'm going to do as much as I can to get all those handles back. Well, you can't get all those handles back because those handles, it's already over. It's done. There's nothing you can do. So you just got to move on. All right, so daily chart. They're trying to stay inside the Bollinger Bands. They're trying to, the bulls are trying to keep this thing from closing, below the December 2018 lows again. It did it on Friday. They had it, and then they went ahead and closed it at 2260. So it's basically a retest of the lows from earlier in the week at 62. Certainly they want to close above 2260, 2262 today. They'd like to close above 2319. There's a lot of day left. There's a lot of news flow left. There's a lot of politics to be played. So for me, I think we're in for another very volatile day in the tape. You got a lot of states now that are on lockdown, New Jersey included. This is the hourly chart. You can see here's the Fed news that popped it. It was a pretty orderly walk up, except for that right there, which has basically kept me from having a very big runner this morning. You see the hourly mid-band. They popped it up over the top there. They took out daily pivot, at least for the moment, at 2341.83, and they went and tested the new weekly pivot up at 2392. So you see the weekly pivot there. Lower band's much deeper. These large pops have been retraced to lower lows. That's what a bear market does. So we'll have to see what about this pop. And I think this pop and the staying power of this pop is going to have a lot to do with the stimulus package that they're trying to pass. I think what we're going to see over the course of this week is the focus is going to become more on the economics, leading up to what is going to be an absolutely horrible jobs report next week. But I think it's a jobs report that, depending on where we are, I think they're going to leak how bad it is well before. You're already having people talk about 30% unemployment. So, I think they'd like that baked into the cake before the tape gets a hold of it. I think this week, though, is going to become much more about economics and a lot less about the number of cases. You're going to see this shift into, everybody's always been talking about the fiscal impact, but it's going to become more focused. It's going to become more focused, and you're already hearing grumblings about how long people are going to have to stay away and the economic impact of that, and that's going to be your focus. And as far as trading goes, as far as as doing this stuff day in and day out like we do, it just equates to volatility. It just equates to volatility. So 2392 is a weekly pivot. If that continues to be resistance over the course of the entire week, well, the same rules apply. Same rules apply whether you're locked in your house or not. If weekly pivot wants to be resistance throughout the first half of the week, then the advantage will be to the bears late in the week for directional days down. If weekly pivot wants to go support, the opposite will be true for the bulls as we get late into the week. I expect the weekly pivot to be fought over, 2400 to be fought over for a period of a few days. On the downside, they're going to want to see 2300 hold in. We're going to continue to trade in great big chunks of price. Don't expect anything different. Great big chunks of price. You've got to respect price. You've got to respect risk. You have to have a risk plan. You have to trade with disaster stops, or you're going to get run over. You are going to get run over. Ask the joker that was short like 22.10 with no hard stop or no disaster stop when the Fed opened its mouth at 8 a.m. They got smoked. Don't get smoked. Don't get smoked. There's a lot of month left. There's a lot of year left. Okay? There's a lot of everything left. Don't get smoked. Don't jeopardize your ability to trade by being flippant with risk. All right. Everybody have a great day. More stuff out on social. Come check us out. Love to meet you. A lot of new people. A lot of trials becoming subscribers. And we're just going to keep doing our thing. Take care. Be safe. Trade them well. I'll talk to you soon. Follow us over on Twitter, Instagram, and Snapchat at Princetontrader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade 'em well.